Absolutely. We've got, I think, demand slowing globally, and we've got higher interest rates, which means debt held by corporates is going to be refinanced at a much higher level. There's going to be more debt payments coming out of their profitability. So it's going to be quite tough, but it's very stock specific. If I look at the sectors, we do see the miners, they fell about 10% in their dividends coming off the peak they saw in 21. And given what we see with underlying commodity prices, I think that's going to be quite a mixed picture in 23 as well. But then other sectors, we're seeing good dividends out of the banks. We think the energy companies can continue to pay decent dividends. So it's really quite sector specific and stock specific.
Hi, Jane. Yeah, absolutely. With all that said, do you think the FTSE cuts it at 3.8% dividend yield now? Bearing in mind that's kind of within a couple of decimals, really, where it was when interest rates were zero. It's not as attractive as it used to be, is it?
I think 3.8% dividend yield is pretty attractive globally. The UK is one of the high yielding markets still. Dividend growth isn't going to be particularly exciting. I think we see low single digit growth in the UK. But I do think you've got to remember in the UK, we saw some very severe cuts to dividend levels during the pandemic. And what we're now seeing is those companies that have come back at more sustainable levels. You know, BP and Shell cut their dividends by 50%. They've just announced results and they've increased them by 10 and 15%. So good dividend growth, but off a much lower base. So I think, if anything, even if earnings come under pressure, dividends are going to be more resilient.
Yeah, there's still a lot of question marks, though. I mean, I look down at the dividend list, the same as you do. No, in fact, I don't look at it a fraction as much as you do. But I look at Vodafone at 7.5%, 8%. I look at Legal & General. I mean, did I just see Legal & General's got over 9%, dividend yield as well? I don't understand why these companies, these blue chips, have such high divvies. If so, do you think they're at risk?
I think for Vodafone, possibly there may be a risk to its dividend payment. There's a lot going on at Vodafone. There's some talk of restructuring them, having to sell off assets, etc. So in that specific case, there could be a bit of a question mark over the dividend. However, with the financials, I just think these companies are incredibly cheap. Indeed, we just saw M&G has an incredibly high dividend yield, and then we've seen interest in that company from corporate activity, possibly, who knows. But the point is, I think UK, some of these stocks are just so ridiculously cheap, and some of these dividend yields are sustainable, will be paid, and if you get it right and avoid the value traps, could be very fruitful with regard to your returns.
Jane, what difference does the tax rate make to the dividend payout? Is there any correlation? Because we know from April 1st, the corporation tax in the UK is jumping from 19 to 25%. Will companies reflect that additional cost in the way they think about remunerating shareholders?
Clearly, there's going to be more tax to be paid by companies. And as I said, you've got possibly slowing revenue as the global economy slows. And you've also got higher debt levels to possibly service as you have to roll off your debt and refinance it. But clearly, management are very aware of these tax changes. They know that's coming. And I don't think from this level that dividends particularly are going to be under risk per se. What we have seen is where there's excess cash being generated by companies is they're doing some share buybacks. And you could see some of those being turned off.